Welcome back to Morning Movers. I'm Diane King Hall, live from the floor of the New York Stock Exchange for a preview of Micron's earnings, and a conversation about the broader semiconductor space. I'm joined by Phil Streible. Phil, I have not talked to you in forever because you do all of our other shows. Anyway, sorry, feelings getting there. Let's talk about Micron and the expectations for this quarter. Analysts looking for revenue to come in at a record this quarter, topping $11 billion. Where do you line up with your expectations?
You know, this is a name that we've consistently maintained for our clients, and with the recent rally, it has pushed itself back into our top 10 holdings. Micron trades much like a commodity, and it's nearly 3x here since those April lows. Technology as a whole has been a core driver to the U.S. equity performance, supported by strong AI investment and adoption. So from a portfolio management standpoint, this position has grown to a 3% holding, and from a portfolio management function, we are trimming that name ahead of the earnings. So it's simply portfolio management. Oracle, Broadcom earnings, Micron has reacted terrifically. We expect a great report. So the question is, how much is baked into the cake?
I was going to ask that, especially given how far the stock has run. I mean, it's up, more than 90% year to date. So you believe it's essentially mostly baked in. Do you see any potential room for positive surprise?
So you see Micron is driven by tailwinds from that high bandwidth memory, the sales led by NVIDIA, the AI-enabled phones and PCs, where lagging technology products are becoming increasingly flushed out. Simply put, your old iPad, your old iPhone, it's just not going to be able to handle that AI anymore. So we anticipate strong year-over-year revenue and earnings growth driven primarily by the demand for the memory chips used in the AI servers. They've got key partners with NVIDIA, and that's the major tailwind, and its market share is what everyone's going to be closely watching.
Okay, and so let me ask you that though. The stock is still considered cheaper than others in the industry. Do you see that valuation discount as an opportunity? In other words, if there was a really big upside surprise, would you add back to your position?
Yeah, absolutely. With margin expansion and sales growth in AI chips, these are solid outlooks here. You could see something like a base case where you have continued strength in these AI chips. Price target, we could start moving back up into the 180s. You get the bull case where you get increasing market share, faster supply growth, increasing AI adoption that could drive that stock well over $200. Your bear case is pricing pressure, softer demand, oversupply, increased competition, notably from Samsung. That's where you get markets breaking through kind of some of those support levels where you look at potentially adding back in the 160, the 150s, and a breakdown below that into the 130. That would be your bear case. Really, those risks are that Samsung has finally passed NVIDIA's qualifications test for these types of chips here. Samsung's shipment volumes this year, they're going to be limited due to NVIDIA's existing orders with SK Hynix and also Micron. So this is going to be a competitive market, but it's mostly next year when you get all three competitors competing for market share.
Phil, let me ask you this. What was your thought on that news yesterday that we have about the big, massive investment that NVIDIA is making into OpenAI? What does that signal to you about the broader space?
I mean, it's absolutely incredible, and that's why it's fueled this rally. That's why the NASDAQ just continues to outperform, and this market is starting to broadening out as you get NVIDIA starting to spread some of that wealth, some of that capabilities into other companies out here. You've got a number of horses that are continuing to push up into, this fueled rally that we're seeing here, and this could just be the start of it. We could actually see, because of the economy, because of the Fed cutting, because of the weaker dollar, we could continue to see investors wanting to get out of cash into technology, into some of these leaders, and this market could really move on up, and we could push on all the way through into early 2026.
Potential. So, we've continued to see this momentum fueled by gains in the tech sector. And of course, Micron, they have a lot of different clients, whether we're talking about the hyperscalers and the PC manufacturers, the OEMs. Do you think that tech will continue to have the same kind of momentum, not just into the year end, but throughout 2026? I mean, the way you put a pin in early 2026, it sounds like you're concerned about some potential lag.
Well, there is possibility that we'll see some of the trickle effect of the economy, of the weakening labor market. The inflation should start to kind of rise. The Fed seems to be comfortable with where inflation's going. The reality is that every day more and more people are continuing to use AI models into their day-to-day functions here, whether it's simply like ChatGPT or other applications. And what that does is it has that effect where you start to see some of this old technology, some of these old computers, some of these old laptops, phones, they're really just getting, they're just, they need to be decommissioned here and new products. And that's where we're seeing, Apple with their increased sales here and strong demand for that new product is really going to fuel this new AI adoption.
So it's so funny, Phil. I was looking at this list early this morning of jobs, and that would be replaced or could potentially be replaced by AI. Essentially, my kind of job came up on the list. I'm like, whoa, uh-oh, coming too close. But also, I saw sales on the list. That surprised me. What's your thought overall on the space? Do you see it potentially just taking just about every job?
It's really tough because I look at a lot of different companies that are adopting that or fully going like autonomous here when it comes to driving. And it is really unfortunate that some of these jobs are going to be replaced. So people will have to structure themselves. Unfortunately, it's also a tailwind for many of these companies here where you're going to see some of their costs come down here, specifically around labor, and they could start to adapt to some of these different things that potentially implementing robots and things like that into their day-to-day functions here. So people are going to really have to become much more specialized in what they do here in order to have a meaningful impact and really solidify themselves within the corporate structure.
Okay, Phil. In the future, you'll still get to talk to me, but hopefully there will be some time before you're talking to the bots next. We'll leave our conversation there for today. That's Phil Streible, Chief Marketing